By means of quick introductions, we have Chris Huber from PwC, David Byrd from EY, and Eric Lacerenza from Deloitte. Sure. So we've heard from 3 different companies talk high level about getting through crypto audits. So now we're going to do a deeper dive into crypto audits from the very beginning to the best practices. We see a lot of companies going through audits, but we see even more that aren't even getting ready for audits or maybe just preparing for audits. So it's to discuss a little more about the technicalities that these individuals think about. Now, I mean, we're talking about many different companies, NFT companies, DEXs, mining companies, CeFi companies. So the individual risks and brand new risks, risks never seen before, could be very new. So we'll go into that, get their thoughts on several topics, and I think ultimately just talk about how do we get to a point where these audits become more regular, where we could trust the financials even better, and it'll be a little more streamlined from getting every company into this state. Before we even get to the audit, David, what are your thoughts on how companies get through successfully to be approved by the firms in starting the audit? So not even beginning with the audit, but the steps leading up to that.
It's a great question, Jeff, and it's okay. I didn't need any introduction. I feel like I know a lot of you in the audience. It's great to see us all together here, especially my peers. This question about how you onboard a new client, or even with a current client, a new engagement specific to digital assets, crypto, it's one we probably think about constantly because, as companies mature in this space, they realize they need one, right? And it becomes really path dependent if they operate too long without one. So, it's one that really occupies a lot of our thoughts. And so I'd love to hear what you guys think. Eddie, why the best path that I've seen is not where, say, one person at my firm will get excited about it and they go to risk management, sort of ask for permission. That's just not the way onboarding really ought to work and does work. It's one where when we understand the prospect, we go very deep in trying to assess, okay, what do they do? Do we understand it? What do we think are the risks? Can those be mitigated, right? Really own that evaluation, and from the first day, work closely with your risk management professionals so that they're there with you from the beginning, so it's not some surprise. It's not like you just go to ask them for permission. It's you work together to try to make this thing happen. And so obviously not every client's appropriate, just given a whole bunch of factors. But that sense of sort of shared evaluation with the team and the risk management function is one that works for us, I think.
And are there certain things to get to where every company can be appropriate for this audit acceptance process, or are we still too young, where there's maybe too learning or things that we don't want to address?
You mean like to take on a Big Four audit? Do you need to be at some stage of maturity before? Is that sort of around there?
Yeah. Do you need to be a certain stage of maturity? Do you have to be around? Does the new technologies need to be fully vetted and understood, or is this a process that we learn as we look at each individual company?
Yeah, I mean more the latter, and it's just look at companies that get audits from Big Four. Some of them have been operating a while and they've worked their way through several other service providers, and then they migrate over. Some of them do take them on from the beginning. So really, I think it is that function of, like the earlier panel, we talked about how do you build your finance function, right? Who do you hire? Do you have the right people? If a company that's a startup that's just launching operations for the very first time has this incredible cast, right? And they understand what they do, they put those processes and documentation and controls sort of all in place, well then, that's really the question. But Chris?
Yeah, just going off, the processes and controls, I think it's important to contextualize what an audit is, right? We are providing an opinion, but the financial statements are still the responsibility of management. So does management have the competency and the financial reporting function to take responsibility and ownership of those financial statements?
Gotcha. Interesting. So when looking at risks now, crypto companies are very unique. Erica, what are your thoughts when just looking at the different risks to consider at all these different companies, and how would you approach that?
Yeah, thanks, Jeff. And I would say that the risks depend on where the company is in the ecosystem. So what products and services are you offering, and then where are you on your corporate journey as well? I think most important is to set up that robust risk management framework that's holistic and laying down that foundation for corporate governance, and think about risks holistically. So business risks, operational, technology, and of course, accounting, financial reporting, and regulatory. And then there's risks that are distinct to digital assets. And some of those that we focus on relate to the ownership of digital assets. So from a custody perspective, private key management. Once those keys are compromised, if assets are transferred, then there may be no recourse. And also consider the type of product that you're using as well, which will impact the related risks. So if you're using a third-party custodian, do they have a SOC report? Are the funds commingled? If the funds are commingled, that might create additional risks because you're reliant on that custodian to allocate your funds and separate those from other customers' funds, as well as corporate funds. And then I'd also mention KYC considerations. So because of the pseudo-anonymous nature that the blockchain creates, there could be additional risks related to client and counterparty onboarding, as well as identifying all of your related party transactions.
And David, do you have any other thoughts on specific risks crypto companies face and ones that you look for when you go into the companies?
You could tell Eric was prepared for that question, right? I mean, there are a lot of key risks that we look at in this space, and I think you covered the domain pretty well, and I'll just supplement just to see how important it is. You know, those risks that Erica talked about around, you know, private key management and custody of your assets. Are they self-custodied in some cases? Or no, we've now migrated to custodian. Maybe it's both, depending. That evaluation of counterparty risk is just something that we've seen can sometimes be lacking at companies. I'll just say, okay, well, where's the coin? We use so-and-so, right? Okay, great. Well, like, tell me about them. Like, what's your relationship? Like Eric was saying, do they have a SOC? Have you performed, as management, your own diligence? On the audit side, of course, we're going to look too, right? And hopefully we already have a good understanding. But we expect management to have done some of that diligence. And so, yeah, I think those are the big ones.
Any thoughts, Chris?
Yeah, you know, this is a crypto conference, so obviously there's a lot of focus on the risks specific to crypto, but like one thing I would say is, you know, an audit is not just on crypto. You know, make sure you have the basics down, your cash, your other important processes, and identifying the risks in there. Because, you know, I think to, you know, back to the initial question, to even be accepted, we have to have confidence that those basic processes are being done correctly and you've identified those risks before even tackling the more complicated stuff.
Gotcha. Now, this is a off-the-cuff question, but many of us have dealt with first-year audits, and then there's the ongoing audits. What are your thoughts on the differences in focus and time and effort it takes? I've personally been through a first-year audit, and it's rigorous. Felt like it was never-ending. But want to hear your thoughts on the difference between first-year audits and, you know, the ongoing audits after the first year is complete.
Yeah, year one is definitely, I think, the hardest because you got to build the knowledge from the base, you know, understand the company, understand their processes. And I think as time goes on, right, you build that trust. And really, you know, back to what is an audit report, it's saying, you know, we're providing trust that they're free from material misstatement. So as that trust develops with management and around the processes, I think it becomes easier and easier because, you know, you understand where the risks lie and what areas to focus on.
Yeah, and that's what Solomon brought up. Just the relationship you build with the partner itself on the engagement is super important, just to build that trust, just to make sure that, you know, there's a mutual understanding of trust when going through this audit.
Yeah, I think the best audits I've ever had are where, you know, the client comes to me and says, hey, we have this issue, and being proactive versus, you know, being quiet about it. And then if we discover it, then you lose that trust. And Once you lose that trust, you start turning over more and more stones. So, nobody's perfect, and I think the more upfront and communicate with your auditors, the smoother the audit process will be.
And I would add that our approach is such that we do a great deal of work at the onset, so even as part of that engagement acceptance from an audit readiness perspective. And so at that time, we're working with the companies, we're understanding what digital assets do they hold, what protocols do they hold. And at that time, we're evaluating all of the risks, but also understanding what support are we going to obtain from an audit reliance perspective. And again, all of that is done up front and hopefully before year one, which makes the follow-on audits much easier and run more smoothly.
Could I just briefly add on to that, just because I think it's that nearby topic of audit readiness. Well, we're talking about audit, so of course it's sort of relevant, but it's great if as a company you can engage someone or undergo yourself this readiness for all these things we're telling you are challenges, right? But you might already be operating, right? And you might already have an auditor. But because you're planning to expand your roadmap and launch new products and add new tokens and all that sort of thing, it's just as important to continue getting ready for this next year's audit, and you might engage someone else for that. You might do it yourself. Just really, probably a big part of what we do at EY is just helping companies get ready for an audit.
Now, with the ever-changing landscapes of the companies, how they grow, how they try different strategies, different protocols, do you guys see that as a challenge as you go through audits, or is it that what happens in the current year versus the audit year is different? Or is it that you try to better understand what's to come, their strategies? I guess what I'm trying to get at is an audit from a point in time, or is it a ongoing relationship where there's communication, where there's review of new processes despite not being maybe in the audit year? What's the relationship like on an ongoing basis between you and the different companies?
I would say it's certainly ongoing. I mean, especially also considering what kind of company you are. If you're a public company, then you may require opinions on your internal controls, which will be throughout the year and as of the period end. But one of the controls that I would point to that I think would be important for companies to have in place and to address what Jeff was just asking about is, as you're evolving, as you're onboarding new blockchains, new digital assets, to ensure that you have a control in place to assess the governance structure, what's the market share, the business purposes of those protocols. So I think just going back to that internal control structure and getting buy-in from your auditors is what would be most beneficial.
And let's dig more into controls, because we've talked about risks. Now, how do you mitigate the risks? You build controls. So what are your thoughts on what controls? Obviously all controls, but what are some of the more important controls you look to focus on in building knowledge within companies you face?
Well, and jump in here. I think we could speak for 3 hours on this topic. And when you mention controls, it's a great topic to follow risks because they're hand in hand, right? Why have a control unless it's addressing a risk? And so we've talked about some of those risks, right? Like the risks to safeguard private keys, if that's the nature of the business. And so what are the controls? Well, those custody controls, those safeguarding controls. And whether it's on your side or it's at the counterparty, right? A custodian, some other sort of solution. It's important to have controls that just make sure you continue to have access to your private keys or relevant cryptographic material. I've seen, like we were talking about earlier, we'll just wait until next year and take a look at it again. Well, no, I mean, if I was management, I would want to know if I still had control of these assets, right? So that's one, and I'll just clip off a few others, and then we can just kind of go down, I guess. Controls that make sure that your data is actually reliable, right? Complete and accurate. Certainly if it's on-chain data. So we're looking for those kind of classic blockchain reconciliation controls between your books and what happens on-chain. The auditor's going to be looking at that too, right? But hopefully you have those in place. Some challenges around that can be, sometimes the data for that comes from all these disparate sources. Oh, it's this chain, or it's that chain, or maybe it's not on-chain data at all. It's from an exchange, or some other, so that can be a big challenge. Just trying to think of some of the other big ones that kind of we see in this space.
Yeah, I think maybe going off, key management, having controls around the entire life cycle, right? Especially generation, because if you think about a public blockchain, the data integrity of a wallet is there, right? But if you think about the completeness of the population of wallets you provide to your auditors, how do you prove that? If you don't have controls around the generation of your wallets, then it becomes really, really tough to say, hey, I'm giving you all the addresses associated with my company.
What I think is important here, though, is to set those entity level controls at the top of the house, which will be foundational for the company and pervasive across and throughout the entire organization. But some of the other ones I'll highlight again, as David did, the data accuracy and completeness. So think about any APIs or technology that you work with, the inputs to your financial reporting. So revenue, what are the inputs that are going into producing those numbers, and what controls and policies will you point to so that you can assert to the accuracy and completeness of those numbers. Another one that I think is important, especially as companies are growing and evolving so quickly, is around the completeness of contracts and ensuring that you set and document those policies and ensure that you have buy-in throughout the organization, stakeholders in the front office, the deal team that's entering into new agreements with customers, counterparties. Ensure that the financial reporting is also obtaining those contracts and agreements, and it's not an afterthought, but thinking early on, how should these transactions be accounted for?
When you mentioned contracts, it was reminding me of, relying on others and your counterparties and SOC reports that had come up earlier. So speaking of controls, SOC reports play a pretty key role in that. If you are relying on a third party, right, for custodian or some other services, then that's that classic thing that your auditor's always going to see. Oh, do they have a SOC 1 Type 2? Right, that's what we all want. It's tough. It's tough in the space because being a provider in this space yourself, first of all, of course, you have to get your own systems and processes controls up. Then you need a SOC auditor to come in, right, and audit all of that. And then time has to pass. So these reports that we find in the space, that normally we see the most mature examples of at longstanding, banks, are maturing. And so that's really good to see. But when you do say, oh, it's okay, I use, fill in the blank exchange or custodian, they've got a SOC, it's great. Well, make sure it's the type of SOC your auditor wants, namely the SOC 1, Type 2, ideally, and make sure that you're using their platform in a way that is included in the scope of the SOC. If it's not, it's not the end of the world. It just means you're going to have to do more work. Speaking of controls, right? You can't just say, "Oh, I heard they have a SOC." Why not even be a SOC 1, right? Some of these companies that have SOC reports have many different products. You might not even be using the product again that's included. It's likely, given the pace of the technology in the space, they're always adding new functionality, so it takes a while to get in there. Just kind of being mindful of that.
And how much you brought up SOC reporting? I mean, we're Cryptio, so that's it's a big focus for us. We've recently revamped our SOC reports just to be extremely detailed. How much attention are auditors currently putting on the quality of the SOC report? Do you often give a lot of feedback on, maybe SOC reports being too generic and maybe requirements of needing more details?
Yeah, and that's why I think it's important what David mentioned, that SOC 1 Type 2, because that's the report that's going to evaluate the internal controls over that application or service provider. And so having a SOC report, again, that oversight due diligence on the third-party organizations that you're relying on is fundamental.
I think in general, it's been funny to see the evolution of SOC reports in general, like over my career here. At first it used to be, hey, we have one, throw it in a drawer, we're good. And then it's been evolved to say, hey, does it really address the risks of the company? And do we have end controls on our part to be able to use it? I think there's definitely a lot of attention paid to the specifics. And, one thing I'll say, especially in a new industry, is not all SOC reports are equal. So make sure, it is actually giving you coverage for what you say it is.
Right, because that's a starting ground of quality of data.
I'll just add that, yes, SOCs vary widely in whether you can rely on them. And when I say you, I mean you as management. Hopefully you would like to know whether you can rely on this vendor, especially if they're providing data that feeds up into your own financial reporting, right? You want that to be accurate. And then your auditor certainly needs to know that. Thinking about SOC reports, I agree with you. When you think about traditional global sort of TradFi custodians that have SOC reports, yeah, you do take that for granted in a sense that they've been around, they've been vetted, you get them, you review them, but in this space particularly, where the functionality and the assets and the type of data just evolve so quickly, it means that you do have to look at the scope of that SOC. So looking at the auditor of the SOC definitely helps too. Is this an auditor that actually has experience in this space, right? So you want to know, is the SOC audit being done by someone who's competent, right? And then, you're not going to have every platform with beautiful completed SOC 1 Type 2s and pencils down type of thing. If you don't have a SOC, that's not the end of the day. It just means you're going to have to do more work to get comfortable with what role that vendor has in your space. We have definitely seen SOC reports that, if you go through them, look, they found some exceptions. Turns out couldn't rely on this control in the SOC. It was supposed to be operating effectively, but it was not. Oh no, which one was it? And so you look in there, and again, it's not like everything blows up necessarily. It just means, okay, well, I guess I'm going to have to audit that myself, and that might be difficult or for all sorts of reasons. But anyway, just a little more color around SOC reports.
That's great. And any last thoughts on the controls? We've thought about all the controls leading up to the actual accounting and financial reporting. Once we get to that phase where we could rely on the data, we understand the revenue recognition, what type of controls should companies think about towards the end of actually booking this financial reporting, reviewing of the financial reporting?
You want to ensure that you have financial reporting controls, and so you have that technical competency and understand if you do have that or if you need to go out there and work with advisors to ensure that the transactions are accurately and completely recorded, and understand the regulatory implications of the transactions and your related businesses.
And I've always recommended having just supporting documentation because the general ledger and the line items are going to need to be supported. So if you don't have the support, you'll need to recreate it. And, it just takes time, and you need to just really concentrate on making sure you get that support and document it and save it away, because, you have people issues too in companies. You have turnover, you have people saving stuff on their desktop, and then, all the support disappears for why they actually booked these entries. So I've seen a lot of need there as well.
Speaking of people, just briefly, segregation duties controls. When you think about, those review controls of, okay, great, this was done, but then was this and that's tough, right? I mean, if you are a startup crypto native, right, you don't have some vast finance function already built. So, well, it's just the two of us, right? Who's going to do what? But just sort of being thoughtful about those, trying to have second sets of eyes. Those always look good.
Yeah, and if you can't do segregation of duties, compensating controls like reconciliations or, 2 layers of sign-off to make sure that nothing, someone can't post and approve their own entry, which leads to a fraud risk.
Excellent. So let's change topics. We're coming up on time here. What are 1 to 2 words of advice you would give to CFOs or controllers just to be audit ready?
Yeah, so like I said, this is a crypto conference. You're the crypto experts. I think what's important is to be able to take that very technical knowledge and be able to communicate it to an auditor in plain speak who may not be a computer science major or, even spend any time on, playing around on like decentralized protocols. So, we're all here because we love it. and have spent time with it, but that doesn't mean the auditor is speaking the same language you are.
I would say technical expertise. Again, I go back to that technical competency and ensuring that you also, you're able to identify those nuanced risks as a company and be able to create and implement the policies and procedures to address those risks. And also from an audit perspective, being able to document key accounting positions and judgments taken and take ownership of it.
If limited to 2 words, I'm just going to be a broken record here. Internal controls. Just because it's tough to see. And really trying to think carefully about the different types of risks out there. I've heard it often said, oh yeah, we've got a coin over there. Yeah, it's an investment risk. Well, yes, if the price goes to 0. But that's different from counterparty risk in the sense that they might just lose your assets, right? So just sort of acknowledging that, tracking that. And honestly, in this space, I do find companies that, actually have possession of either their own assets or their customers' assets, they have some pretty robust, like nuclear secret grade level controls around secret and private keys, because once that's out the door, game over in many cases. And so they're often quite robust, but they're not documented, or there's not some process around that. So those are key. But I really like the focus on technical competency and making sure you speak the right languages, because so often, finance function just completely. You guys have heard these topics at all the conferences, right? Getting us that operate in this space to really understand. Obviously you're not going to get all the engineering level, but understanding enough of it that's relevant to what your job is.
Thank you. And just one last question. The crypto industry is unique. It's not like other industries. So what type of tools or techniques were developed in order to handle these crypto audits?
I can start with that one. So we at Deloitte, we have a proprietary blockchain auditing tool. It's called Deloitte Omnia Digital Assets, and it's a tool that we use to harvest bulk blockchain data. We work with over 40 protocols, and we're able to streamline the data so that we can use that as reliable audit evidence. And we have a team of engineers that are specialized, and they're continuously refining the tool so that we can work with our clients in this dynamic environment and continue to work with new protocols and new digital assets.
We also have a tool called Halo for Crypto that does direct integration into blockchains, and then also is able to, provide comfort over the ownership of keys without you having to give us your private key, which, like we said before, you don't ever want to do that.
Yes, let's not do that. Hilariously, I'm only grinning because, I wish we had 3 hours on this topic. I wouldn't wish it on you, but, selfishly. I think we did have a client one. Can we just give you the private key? Yeah, no, not as your auditor. We would have access to you. We would own your assets, right? So, same, right? Look, we've been around a while. We've all audited clients in the space a good long time. And in the beginning, there weren't any tools, right? So you had to build them. Plus, there's also some risks, like, well, what if you rely on this other tool? What if they go away? Well, then I have to do this. Happy to say that today, the tools that are available are maturing, progressing. They're broadening their functionality, obviously. Cryptio and others have built out their own suite. Yes, like Erica was saying, EY also has its own, what are we calling it these days? Blockchain analyzer. The thing is that you can't just build it and okay, we're good to go. Because, right, this is the space we're in. Constant evolution, constant change, and often very, very fast. So you're talking about what are in the scope of a SOC, very quickly grows stale unless you don't stay on it. Same with the tools. So the tools that you use, and the tools, of course, that we use, need to be constantly tracked. just because if you're not looking, either you won't cover that new protocol that your investment manager client decided to jump into, right? Or NFT functionality, or they're now using a new wallet provider. Can you track that? It's just an endless, exciting, innovative ecosystem, and you can't do it without the right tools, and you have to track those tools as closely as you can.
Well said. Well, thank you, Chris, David, Erica. Thanks for all your insights here.
Hey, nice to meet you all. Thank you. My name's Corey from JFDI Accountants. Quick question. Is there any common themes that you've seen when you have clients coming over from a smaller audit firm to being audited by the Big Four, where maybe they're like, hey, I think we're in a good spot, and then you guys take a look at it and you say, not so fast?
In general, I would just continue what's important here, and it's the same themes that we've been talking about, that robust internal controls at the top of the house, those entity level controls, and then going back down to what we've been talking about related to the data, the accuracy and completeness of the data, the reconciliations, controls over KYC, onboarding new customers and counterparties. I mean, I think that we've hit on some of the important themes that we want to all consider in this space.
My question is around data accuracy. So all three of you mentioned that you guys have tools that you're using to pull that data. My question is really, are you guys using archival nodes, or are you guys using data scrapers? Because if you're not using a node, there's a significant question mark on if your data is truly complete. And if that's the case, then how do you trust your own data? And would it be smarter to trust the data of providers like Cryptio who are using archival nodes?
Happy to take a stab. I won't speak for you, though. Yes, so there's a lot of blockchains out there, right? And so we do host and run our own archival nodes, certainly for, where a number of our clients all have exposure to the same type of, so Bitcoin, ETH, and things like that, right? But as you go down the long tail, it might not make sense to run an archival node for every single one of them. Of course, some of them can be very pricey to do that. You know that too, right? So what do? Well, there are other sources to that data, but to your point, how do you know that's accurate? Maybe you find some random block explorer out there, and here's the balance. I guess there it is. Well, that's not going to be good enough, right? Especially if you don't know who they are, right? And so what you might do is you might bounce that off, triangulate with that among other sources and see if you can get agreement specifically. So it is a bit of a stratified approach depending on the protocols and assets and smart contracts your clients are into. It's just making sure that whatever you do, you are assessing whether it can be relied upon, just like some of the tools you made reference to do.
Yeah, no, I think one thing to say on using data from, other sources is it gets back to SOC 1s. There needs to be controls that provide comfort around the completeness and accuracy of that information. As if those are in place and they're deemed to be sufficient and cover it, there is some reliance that can be placed on data from, outside sources.
And you might see in that SOC report controls that speak to, and we've reconciled this data with the node that we maintain, or not, right? So again, making sure that you can rely on that data is key, because we have to assess that.
All right. Well, thank you, everyone.